Start recording for now. Yeah, anyway, would measure this, right? Market structure, A, first 23%, or it could be around the zone. So I always mark it this way. This is my first take profit if I sold at the top here. This is always where I find my full margin entries around. Okay, let's draw this. I find my full margin entries around the zone. I'll show you also how to find these things, but I'm just trying to show you basic structure of your take profits, how to trade these corrections. A friend of mine was asking me how to trade corrections, how to take enter trades, in day trades, and all these things, swing trading, and all these type of things. So yeah, all these things you just notice them within this market structure. Uh, when price is probably currently here, you know you can be playing around here in your day trading, playing around the zone because all you know is that price is just maybe going all the way up there. You could be buying around here, maybe selling here, just playing around these zones. And then when you're swing trading, if price is currently here, you could just buy and just let it go. Uh, and then odd JPY, I have another buy that I just bought here for the, I think I'm buying for the next 2 years or something. No, I actually sold the next 2 years. Which recommended time frame to analyze? Analysis starts from the monthly always. We start our analysis from the monthly so that we can get the market direction. I don't just like hopping into a chart and just drawing all these things because it won't give you proper detail of maybe where the market is going. So it's always advised so that you can basically follow the whole trend and know what is currently happening and all these things. Let me try show you Nasdaq. Do I have those? Where are those pictures? Did I send Shati? I think I sent Shati. I think I sent my boy that. Okay, my phone is not connected. Let's just try connect the phone. Yeah, I'm just gonna try show you the Nasdaq pattern. Okay, fuck it, dog. It's taking forever. But anyway, yeah, Nasdaq. Let me just go to that. I had already seen this since way back. I think I caught it when it was somewhere here. I knew that it was going all the way to the top there, and then we'd have our full margin sales. I did all these things. It's just that these things are moving around. I didn't properly plot them. Uh, yeah, I also have this thing. This is just basically the market structure. This is what it looks like again, and all these things. I think I was drawing for my friend or something like that. But yeah, this is what Nasdaq looks like. If you take it from the monthly, you have a proper direction of where it's going. So you don't really care what price is doing at certain zones. You just relaxed because you basically know what the market is doing or where it's going. Let's go to the 4 hour and try see. You see, in these zones, FTR had bounced off that also. I've had it for like a whole month. I'll send you also the. I've had it before when it was still somewhere here, I think. And then yeah, I had that. I had that. FTR had bounced off that. When did it bounce out? Friday. Is it Friday? No, sometime this week. I actually didn't see that. I actually forgot about it. I have a lot of analysis that I do and forget. But yeah, back to the first chart. We're at not that one. Where were we? Yes. Back to this. This is basically when you find the market structure. You always start from the monthly, as I was saying. Monthlies are so that you can get a proper direction. In this case, this odd cat, we're starting from the monthly. We're just gonna start all the way to the monthly until you get to the 4 hour point in the day. And then once you have such things, you don't really do much analysis. It's like your analysis is just valid for a very long time. All you just be doing is just adding this, that, maybe editing this, that, where maybe you are wrong during the week. But at least you have the whole direction of where the market is going or where it's headed. So it's much easier for you to get sweet trades, when to get out of the market, when to hop in, and all these type of things. So in this case, how to predict wave 3. I mean, I showed you how what wave 2 is, what wave 4 is, what wave 1, what wave all the way to 5. How we predict wave 3, we use a Fibonacci trend extension, trend-based Fib extension. You start at the bottom point here, all the way to the top of wave 1, bottom point of wave 2. Every time at the 161.8. In this case, let's just do this. Let's move these things here. Okay, let's just do that. My 3 would be there. If that is there, that is there, and that is there. 3 is always at the 161.8 or at the 261.8. I'll explain that just now. Let's just put these things back into place. Yeah, it would look something like that and like this. Yes, this is how price would likely to be moving. Yes, how you predict the wave 3. Let's do that again. Bottom point here, all the way to the top here, all the way to the bottom there. And we have our wave 3 at the 161.8. It's only here if price did a correction of 4. But if it sometimes it just does that. If it did something like this, then you know that there was no correction. So it's likely to come to this 261.8 and make that our 3. And then maybe our 5 would be all the way up there, maybe our 3 like that, and then maybe our 4. Yeah, it could do a 4 that's like that. Let's just move this way. Let's make it look proper. Yeah, it would look something like this if it's at the 261.8. That's how you measure it with Fib numbers, Fibonacci numbers. I don't know. You should just research what Fibonacci numbers are so that you can basically see. These are just patterns and behaviors of all traders, from the big boys, what they call it. They trade like a big boy, trade like what? It's just basic patterns of how people think and how nature is. I know that sounds funny, but the market is just basic nature because it's just people doing certain stuff, responding to their thought patterns and all these things. So yeah, anyway, once you have your wave 3 points, you just mark your zones. You'd mark the zone to check if price would likely to retest there, and then you'd mark that zone again if price doesn't retest or correct around here. Retest and correction is basically the same word. So yeah, if price doesn't make a sudden movement around here, but in this case, let's just say it takes this, because it's very rare for price to do these things unless there's like so much momentum and strong. Okay, fuck this. Like so much strong momentum and everything like that. If let's say, I don't know if you know about momentum, price momentum. If price is just rallying all the way there, as in you guys say rally base drop, like just QMO people call it rally and then a base type of thing, rally base drop, all these things. But it's just 1, 2, 3, 4, 5. It's just the market structure. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. ABC. 1, 2, 3, 4, 5. ABC. That's what we look for. It's just all the things that we just be capturing. And then when we look for full margin entries, always at the 5, guys. It could also be within 1, 2, 3, 4, 5 here. These small 5s. Every time at the 5, you smash a full margin entry, whereby your stop loss is literally at nothing. You don't even need a stop loss at that entry. And every time when you hit the full margin entry, price tends to retest at least 1% to 6%. It tends to do this. I mean, 0.60% to 1%. If you have just 402s, 02 lot sizes, those are likely to make you $100 or even more than that, depending on if price will just decide to go down. But you know that once it gets to the 60%, it's either you take profit or you just move you take breaking even, and then you bring your item just there, your stop loss there, just to protect your profits and stuff like that. And then you wait to see if price is going to retest at the 23% level or the 38.1% level. The decision points. Let me show you again. Fibonacci here to here. Decision points, 23% and the 38.2%. These are the decision points. This is in any price. Price will first react to this when it's coming down as a downtrend. It will first react to this. For people, this is how market makers start playing around with people's emotions. Let me just show you what they'll do. It'll start dropping, and then people start selling when they start getting lower highs and lower lows and all these things, getting validation. They start selling. It's around here. It starts going back up here. People start saying, let's re-enter because, it looks like it's a downtrend because it's been validating for you with those lower, what. And then it starts going all the way up there, takes your stop losses that were here. Even if you put your stop loss here, sometimes if there were like so many entries around the zone, B is likely to do something like this. I'll show you also in real chart analysis and everything like that. But yeah, before we get on with everything, let me just, guys, give you my number so that if it does cut, you can just app me and then I can send you 76. Oh yeah, 75. So that I can just app you the link again so that we can continue the Zoom meeting. Yeah, as I was saying, sometimes the market once starts taking your stop losses out and everything, it starts doing this. It validates for people that it's doing what? It's doing an uptrend, a new high, a lower high, new high, all these things. When it gets up there, you starting to buy like crazy because you've been saying it's on an uptrend, then it starts coming down. It does something like this. You thinking that it's going up, and then it comes crashing again. It takes your profits and all these things. That's how these people play. That's how the market maker does all this funny thing. I don't know what big boys and all these things are and all these whatever things they call them. I just react to the Fibonacci levels. I calculate my moves basically. I prefer calculations over just randomly doing because you thinking this is the right supply. People also could do this and say every time price will get here, it's going to drop. Maybe you've measured it for some time. SR flips, what, and then maybe it gets here, you start selling again, but it breaks all these things. It takes you out because you didn't understand in terms of Elliott wave what the price was doing, or whatever. And then how to predict the full margin entry, guys. Full margin entry is always something like this. From the bottom here, we take the top point of wave 3 all the way to the bottom point of wave 1. Now, with this entry, guys, it's a very tricky one because they wouldn't just make it so simple for us, because if it was very simple for us, then everybody would probably be a millionaire. So in this case, we tend to measure this, right? Would say this is likely, okay, let's do this. Top point of, start point of wave 1 all the way to the top point of wave 3 all the way to the bottom point of wave 2. That's how you look for the full margin entry. Excuse me. And always with the full margin entry, we always want this Fibonacci extension retracement tool to be around these two zones. The 71, let's delete this. We always want it at the 1% or the 78%. So that's how we look for it. In this case, I'd take the 1% and then try to do that. I'd always have my full margin. This is where I know I'm going all out for my wave, for the retracement. I know that I'll go all out every time from here. Price, every time it hits this point. I'll even show you in live market charts. and everything like that. Every time it gets to this point, it reacts. If it doesn't, if it decides to react and then go back up there, it's still fine. But every time at this price level, price reacts this percentage. It reacts this much. That is enough money. That's $100 every day if you get this entry correct. Every time. No need for stop losses, nothing. I'll show you again in live chats. We'll do that again. That's how you find my full margin entry. I know I'll take my profit all the way down at this A, and then I'm out, and then I'll wait maybe for this QML that can happen like this. Sometimes, it doesn't invalidate QMLs, and people are like, fuck, market makers are manipulating this and that, when it just did a big B, because it would be too simple if Forex was just traded like that, if you just had to follow the QML levels, everyday QML levels, everyday QML levels. It would be too simple. So there's no way it's going to be that simple. Am I recording, guys? Okay, yeah, I'm recording. It would be way too simple if QML did that. Yes, sometimes it reacts to this B when it's here. Sometimes it goes all the way. It'll take people's stop losses that had put their stop losses here, and it goes all the way up there. And then people start saying, there'll be another QML level. They do these things. There'll be another QML level, maybe around somewhere there. Then you're thinking, it's going to take that QML. And then it decides to what? Drop here. When you check the market, you see it dropping, and then you're like, it's not going. It wants that QML. Let's leave it. Or maybe enter or buy, and then it continues rallying all the way to the bottom or drop. I don't know, rally drop, something like that. Yeah, continue dropping. Yeah, it'll do all the way that thing. That's how the market structure is. That's how you find my full margin entry. If we have understood the basic structure and basic drawing of this, we can move on to the chart. Are we okay, guys? Is everybody clear? Are these numbers correct? Oh yes. These numbers is in the drawings here. Yeah, I've tried to put them pinpoint at every point. Let's do this. 1, 2, 3, 4, 5. Elliott wave. Elliott wave is so accurate, guys. It's shocking. I'll show you even in the charts. We'll just do a basic fresh chart of maybe Australian, CAD, or whatever chart that you might like. What chart would you want us to do so that we can see if this thing is valid, or if this thing works, or do we see these things, or it's just a fluke, or whatever? What chart would you want us to happen right now? I don't know. Sugar Smacks, did you get my number, bro? EU. Let's do EU. Okay. EU. Euro USD, right? Okay. Let's go on Euro USD. All right, Euro USD. The one that I currently have on the IDC chart looks something like that. There's full margin entries all the way to that thing. Okay, let me just check, because this one has more detail. I took this chart. Let me see where it began, what it's currently doing. Or should we just delete everything in this chart and then we can start? Okay, fuck it. Let's just do this. Delete. Everything has been deleted. This is how the monthly chart looks like, right? It would look something like this monthly. And then let's try increase the sizes to try see. And always keep in mind when you start from the monthly that these are months. If it's months, this is big information in a monthly, so always keep that in mind. So in this case, if I was to draw 1, 2, 3, 4, 5, we're studying randomly, right? Let's say 0 at the bottom. Okay, no, excuse my language again. Let's start from here. We do that bottom point. Then we take the highest point where price has been. That's the top point, right? We're trying to draw to understand what is happening. Naked eyely, if you had to look at this, you'd say it's a what? It's an uptrend, right? Series of highs, lower, what, and all these things. We're in an uptrend. That's Euro USD. Basically, we are going all the way up there. It's just an uptrend. So in this case, if I was to draw my 1, 2, 3, 4, 5s, and then okay, we just randomly drawing. We haven't started. We haven't done anything. We're just trying to understand which points to take, what to take. If I was to say a 0 here, and then I was to say this is my 1 here, and then this is my 2, this would likely to be my 3, but this is my 4, and then my 5. But keep in mind, Elliott wave principles, before we get to saying this would already be invalid. Remember I said, do you get that? If it was like this, it would be invalid because 4 has surpassed
Because
this.
it breached you.
Yes, thank you. That's a smart one, bro. Because it broke this. If it breaks this, it becomes invalid. Then we need to redraw and read to understand what is happening. We go back to this chart. We look at this gap information here. What happened? Okay, we try to look at this gap and say we could take this as a basic 0 and then a 1 and then a 2, a shallow correction, right? It looks very, very, very small. Let's try and increase this so that it looks something like this, so that we can get proper detail. It would look like this. Would say a 0 at the bottom here. This would be our 1. It's likely to be our 2. We'll do the measurements also. Let's just do this first. We'll do the measurements. Let's try and measure where 2 retraced so that we can get a proper understanding. It retraced slightly above the decision point. So we could say that is our 2 decision point areas. These are the 2 decision point areas. In fact, it's like this. Sorry for my mouse. It's like this. But because price does not do exactly what we want, we can basically just analyze it and look for it, not to tell it that you should come here. You just mark these zones and say, this is likely to be our 2. And then in this case, if this is our 3 up here, this is likely to be our 4. And then we're going, sorry, let's just do this. And then we're going to this as our 5. Do you guys understand what I'm doing? Are you catching me?
Yes, yes.
Yes, okay, no, that's sweet. And then yeah, we have something like this, right? 1, 2, 3, 4, 5. Remember, when we complete a 5, we have an ABC correction, right? Let's do the ABC. 0 here. This would likely to be, we'll just check in the how it retraced between these 2 points, A, B, and then I'll see all the way down there. It would look something like that. Let's just check all retracement levels here. Okay, the decision point. And then we take the retracement of, we're checking retracement of 3. How deep was it? All the way around the 60 to the 70% zone, because this is 78. So around here is probably 70. So 70% zone, we're going up there, and then we look for the full margin entry again. We take, where's my fib extension? Here, all the way there, all the way to the bottom here. What happened? Pinpoint. That's a full margin entry. You don't need, if we are alive, I don't know how old most of you guys are, but I wasn't alive, definitely. I came around somewhere here. But here, I wasn't there. But if I was alive and I knew all these things, I would have made stupid money all the way here. So basically, that's just the starting point. We're going to calculate all these things. So let's not give a fuck about what is currently what has happened here. Let's look for what is currently happening. So in this case, we have a 1, 2, 3, 4, 5, and ABC correction, right? If we have an ABC correction, that means this is our 1. let's just use a text instead of doing the Elliott wave. Let's just say this is our 1. Sorry for adding that. And then in this case down here would be our 2, because this did not surpass the starting point of this. So it's still on a 1, 2, 3 type of thing. So in this case, we'd measure. We're looking for our 3. You remember how we measure the 3? Bottom point of wave 1 all the way to the top point of wave 2. At the bottom point of wave 1 all the way to the top point of wave 1. And then bottom point of what? Wave 2. We look for it. 1.6 to 1.8 is our 3. So in this case, we'd have here as our 3. If this is our 3, what is currently happening here, we just correcting the 4. This is just a basic correction of a 4. And then we take, we're still on a monthly. We'll get to all the dailies, the weeklies, to get to understand what price is currently doing and all these type of things. In this case, okay, let's just delete everything that we've drawn here so that it looks cleaner and sweet. Yes, we have a 1, 2 here, and then we have a 3 there. So we check. You remember the rule that says if, come on, guys, this thing is gonna end again in this meeting will end in 10 minutes. In 10 minutes. But anyway, yeah, let's try get this thing fast. Yeah. Where was I? We're going to 3. Yes, we're looking for correction of wave 4 now, right? Because we have a 1, we have a 2, we have a 3. We have measured them with the Fibonacci extension tools. We have measured them with the Fibonacci retracement. We have measured this 1, 2. We've measured that. We haven't measured this, in fact. We just measured the 3 where it is, which is around here, and indeed it retested around this point. Now, all we do now is measure the whole 3 from the bottom point of here all the way to the top point of 3, which is 3. Right, we check where did price retest. Remember I said decision points around these 2 points where we first take our profit. This is the first decision point. First decision point, we always measure it like this. If let's say it bounced off here, right, and then it created that, and then it came all the way down again, and then it went up but never broke past this point, that means this is our A, this is our B. Do you get that? I hope you guys.
Oh, can you?
Okay, yeah. If you don't get it, I'm saying decision points, right? Measuring wave 3, decision point. We check it on the Fibonacci, yes, retracement. Here it is, all the way bottom point, all the way to the top point. Price, we expect price to bounce off this zone first, around these 2 points. Let's try and make these things darker, man. Nah, I did the wrong thing. Fucked up. How do I increase these things again? Think. But anyway, okay, let's just make it align. Coordinates, visibility, still doing the same shit. But anyway, okay, fuck it. But yeah, we marked this point first, right? This is the first decision point area. So if price comes and bounces off the decision point level and goes up and then decides to come again and breaks past this or gets into this decision point again and then goes all the way up but never breaks this this first reaction of the decision point, that means this first one here is our A. In this case, it would look like a 0 and then an A. Then we have our C. We're looking for our C. Where is price currently at? If this was deep, right? Keep in mind that if this was deep, this is likely to be shallow. If this 2 was deep, 4 is likely to be shallow. So we're expecting 4 around in a monthly chart. We're expecting 4 around this zone, or if it just decides just to play around, it'll come to the zone. right? In this case, I like to also play around with wave levels. ABC, C always has a similar 1, 2, 3, 4, 5, but in downward trend. Like in this case, would have, I'm just gonna try show you a 0, a 1, a 2. This is likely to go a 3, or a 4, and then maybe our 5 here. So in this case, this might still be coming down. Let's go to that, remove the wave. Oh yeah. And then yes, we tried to measure these 1, 2, 3, 4, 5s of a downtrend. I'm sorry I didn't show you the ones of a downtrend, but it's just basically the same thing, but just downwards. 1, 2, we're expecting, oh yeah, we always want this to be at the top here. So yeah, this is our 3, this is our 4. We're expecting price to come here. So I don't see, okay, I think I bought here, but price is likely to come down here. It's likely to come all the way down there. Okay, yeah, we'll get into detail of this. We'll look at it. Retracement levels. This is the 50%. This is the 60. Because this was a deep correction, this is likely to be shallow. Keep that in mind. So these are our retracement levels point. Right? We just have a basic 1, 2, 3, 4, 5. We now have the direction of the market. We're expecting wave 5. We're expecting from here, anywhere from here, we're expecting price to be going all the way to create that big 5 here. We're expecting a 5 somewhere around there. This is just a random drawing, because all the way to here, that is like in 2041 drop. That is in a long time. So we don't really care about this, where it's going. We need to care about where it's currently at now, what price is currently doing. That's the monthly, right? Now, when you get to the monthly, let's try to remove all these wave-like patterns here. 1, 2, 3. Okay, let's change color of the ABCs to be green. So in this case, we'd have something like this, right? We know that price is coming down here. Now, as a QML draw, now we can now look on the left side and left shoulders. What do we see? What has price done around the zones? Where's the SR flips? You see the 50% zone looks like it was those SR support resistance, bounce, 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 what, bounce, 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 bounce. So it's likely to bounce off here, come slightly there, and come down again. But then we check, we'll check these things, because now it's just naked eye guessing and all these things. So yeah, we have a 1, 2, 3, 4, 5. Let me show you something funny. You see this 1, 2, 3, 4, 5. If you look at it, it's similar to this 1, 2, 3, 4, 5. Let's do this. Market is repeated. It's a repeated structure. It's just basically doing the same thing. Yes, from here to here. Nah, dog, I shouldn't be doing that. Not that. Yes. This is similar to this, but this is on an uptrend. You remember, this is a deep correction. This is a deep correction. Yeah, okay, let me just show you. Deep correction, that, also that. Look at this. This is the also here. Similar correction. So we're looking for this similar pattern somewhere down here. This is likely to do something like this. So let's see, we're going to look for a proper 5 down here. I think I could close my trades on Monday, because I had a buy somewhere here. So I'd let it just, or maybe I could let the buy play out somewhere up until here. Now let's go to the weekly to get this proper detailing. This is just rough sketching, guys. We have, now, since we have the direction of the market, we're now focusing on these areas, right? We have a 3 here. We don't even care about all these things there. All we care about is where price is currently at, where price is here. If it's at 3 and that's a 4, we're expecting price to come down to this 5. We try to count wave-like patterns. What has price done here? What has it given us? In this case, if you are just a QML draw, you can see a whole QML and a whole compression-like pattern happening. You just have that here, right? And then you'd have this whole compression thing happening here. We have, that's the weekly view. We just have that at the 4. All we know is that price, we saying that it's going all the way maybe down here. But keep in mind, if this is the 50% zone, that means price is likely to retest around. Even the compression is telling us. You know how a compression works. From a compression, I don't know what news will likely to be coming out. I don't know. So it'll do something like that. But because this is a weekly, we measure this and say, okay, from here to here, that's a whole 13%.